more about learning how to leverage OPM. I just want a little check-in. Do me a 1 in the chat if you're excited for what you've learned and also what you are about to learn. And then give me just a little bit of an idea where everyone is from. Maybe just like a quick city and state, just so I can see a check-in. All right, Cynthia, Crystal, there we go. The chat's kind of going, there we go. Good afternoon, good afternoon, good afternoon. Houston, Indiana, Atlanta, LA, Columbus, Kansas City, Oklahoma, Texas. All right, all right. Fort Lauderdale, Chicago. All right, perfect. So, good thing. Nice to meet you guys. I love being here in this community, and I am passionate about talking about business funding. So, today, I am a visual person. So, what I'm going to do is I'm going to share my screen. I have a very short presentation. We're going to run through this, teach you all about business funding at a high level. And then at the end, we're going to leave time for Q&A. So just in case you have any questions about your specific scenario, I can have some time at the end to go over that. So if someone will do me a favor, you should be seeing my screen and it should say the Business Funding Masterclass. If you can see my screen, do me a favor and just put a 2 in the chat. There we go. Stephanie said yes. There we go. All right, perfect. So this is the Funding Playbook Business Funding Masterclass, and this is trusted by bankers. As Christina said, we work with a lot of banks. We work with a couple thousand banks nationwide in order to put together this process. So the information that we put here is trusted by the bankers when you put yourself in position in order to access capital. So that's everything I'm going to teach you about today. Before we do get started, I do want you to understand I have been in this industry since 2017, so almost a decade. To date, we funded over $160 million in access to capital back to small businesses. Now, the reason I say that is because we've worked with a lot of businesses. We've seen a lot of scenarios. The thing about business funding, though, that's different from pretty much every other product out there is that there is no one size fits all. And out of all the funding deals I've seen, not one of them has ever been the exact same because there are so many nuances, right? So the reason I say that is because this presentation is for general educational purposes only and does not constitute legal, financial, or professional advice to your specific situation. I want that to be very clear. This is great information for learning and understanding how to position yourselves to access the capital that you're looking for, but everything comes back to this, to your specific scenario, right? So while the results are not guaranteed throughout this process, nothing in the funding process is guaranteed. By following what I'm teaching you, you're going to put yourself in the highest probability of the approval or accessing the capital, right? So now that that disclaimer is out the way, I want to go over how we can actually position you and help you figure out your first steps to get funded. So a couple things I just want to cover before we begin. Listen, I have had a lot of conversations about business funding. Like I said, I'm very, very passionate about what I talk about in funding and growing business. However, I understand that this topic can be a little confusing and there's a lot of information all over the place about this topic. So the first thing I want you to know is that if this feels overwhelming, that is normal. It is okay. It is perfectly fine. That's why you are here today, so that we can take this really complex topic, break it down to as simplified as possible, and ultimately help you figure out your first steps to get funded. And all you have to do is just follow what I'm teaching you today. Leading me to my second point, you don't have to be the expert. You just have to follow the process. I'm going to break this down at a very foundational level, and then we are going to work our way all the way up to, at the end, you'll understand either A, what you need to do to get funding, or we're going to leave some opportunities so that we can help you figure out what your first steps are to get funded. And you'll be able to see real examples because we're going to identify all of the problems and pitfalls that other businesses have whenever coming to get access to capital. So you're going to be able to see real examples, real problems, and get real solutions that you can apply immediately as we get to the end of this, right? Now, some of you may have seen my content in the community before. This may be your first experience ever getting to know me. So Who am I? I just want to give you a brief introduction to who I am, just so that you have just some kind of idea of why I'm even potential, or why I am even qualified in order to speak on this topic, right? So the first thing is I'm a credit and funding expert. As mentioned, I've been in this industry since 2017, and we focused on tailored funding solutions. The reason I say that is kind of what I was saying at the beginning. Tailored is the very important part right here, because everything has to be tailored to your specific situation. It is customized to your specific qualifications, right? Number two is I'm a business growth specialist. I manage a seven-figure consultancy, ultimately where we streamline the process for access to capital and asset acquisition. And because of that, there's a lot of deals that we work with, from traditional banks, major banks, community banks, private equity, bankers, and investors. So I am a strategic negotiator with lenders, bankers, and investors alike. If you are familiar, or if you're not familiar with who I am, you can find a lot of my content at CEO Dorsey. I talk a lot about business funding, access to capital, and growing businesses. Now that that's out the way, now we can talk about why you're really here and help you understand why business funding and why this is such a great topic and why this is beneficial to you. So the first part that I want to cover here is access to capital. Smart founders don't wait until they need the money. They're going to position themselves to qualify and have access to capital before they need it. That way, because everything I'm going to teach you how to do is leverage credit and funding to create cash flow. An important component to that is the timing and being able to take advantage of opportunities when they arise in the form of leverage. So a couple different reasons here for why business funding. Number one, grow faster. A lot of people have a business, but they need to grow. So they can use the capital in order to invest into marketing, systems, or bringing on staff that actually helps to grow your business, right? So being able to have the opportunity and leverage to grow faster, that's number one. Number two is being able to acquire assets. Again, everything I teach you is leveraging credit and funding in order to purchase assets within the best interest of your business or your trust. So what kind of assets have we helped people acquire, right? Real estate, equipment, or one of my favorite, even buying another business entirely through acquisitions. Number three, having the ability to invest into yourself. You're in this community. So congratulations, you've already taken a step into this because you've already invested into yourself to grow your knowledge, your resources, and your access, right? So you can use capital to invest into education, masterminds, and mentorships just like this to sharpen your edge, give you access to better people or information, right? And then number four, protecting your cash. I am a huge fan and advocate of leveraging OPM, which is other people's money, right? So I want to be able to protect the cash by leveraging OPM to scale without draining my savings or maxing out personal credit cards whenever we are growing a business, right? Very, very important, because this is a problem that most business owners have, especially in the startup phase, just because they're not aware of how to qualify for business funding, right? So the problem here is that a lot of businesses get denied, but it's not necessarily because they were unqualified or that they didn't need the funding. It's that they didn't understand the structure or really how banks think. Understand, banks and lenders are in the business of lending money. They are not your enemies. They can be your advocates and a higher form of leverage if you understand how to position yourself to qualify for the money they are lending, right? So these are some of the biggest problems that most business owners make whenever they think about getting funding. And let me kind of preface this here, because a lot of people, I consult with a lot of people, and a lot of people think that funding is just submitting an application. And I want to be the first to let you know, if you don't know already, that that is false. I used to say most of the work was done prior or before ever submitting the application. Now I'm going to edit that and say all of the work is done prior to ever submitting the application for funding. Because by the time you submit an application for funding, you need to know that you are in the highest probability of success to get that application approved. Now, because of that, these are the things that a lot of businesses do wrong, that they have a great business. Some of them even have great cash flow, but they're not able to get access to the capital for a couple of reasons, right? Number one, they apply randomly without a strategy. Understand, nothing about the funding process is random. Everything has to be very strategic. Everything has to be very specific, and everything has to be about the right timing. And if any of those are off, even in the smallest portion, it could be the difference from $20,000, $50,000, $100,000 plus in capital, or a straight out denial, right? So understand, everything has to be very, very specific. The next thing is that their personal information doesn't match across records. So either their personal information or their business information doesn't match across the credit reporting agencies. If there's any mismatch, sometimes it can be a letter, right? It can be as simple as one letter being off that creates an identity verification issue, and therefore a person or a business who was qualified is unable to be identified, and therefore, again, they may have qualified for funding, but because of this minor error that seems so insignificant, it makes a large difference, right? Number three, they have no real business presence or structure. Just because you have a business established and set up and active does not mean that it is set up properly in order to get access to capital. So we're going to show you how to fix that. They don't know which banks to approach or when. Most people know maybe 2 to 3 banks, maybe 5 banks, a handful of banks, right? Y'all don't realize, or most businesses don't realize, that there are over 4,000 banks in the United States alone, and all of them have different products and play a different role depending on your specific situation, because not every bank in the United States or in the nation works the exact same. They all have different products and different benefits depending, again, on your specific situation. And choosing those banks is very, very important, because you take these thousands of banks and are going to narrow it down to 1 to 5 potential lenders that you could use for your leverage, right? And then the last one here is they burn inquiries and get denied over and over. Without understanding the strategy, without understanding the structure, a lot of people are going to waste time in inquiries and not get the results that they're looking for from these quote unquote seemingly insignificant things that make a lot of difference. So that's the problem. Now I want to give you the solution, and the solution is to really think like a bank. Again, lenders and banks are in the business of lending capital. We just have to know how to put ourselves in position to access the capital that they are lending, right? So understand that to think like a bank, a lot of businesses have potential. They have great ideas. They have a potential to be a great business. However, lenders and banks do not lend on potential. They lend on predictability. So again, what does this look like? So when your file looks organized, your history is clean, and your business is structured properly and presented like a real business, then getting approved becomes the expected outcome and not a hopeful application, right? Whenever we're submitting it. So what does this actually look like? Clean history is on-time payments and low credit card balances show that you're reliable, right? So lenders are going to always look at something called comparable credit. Comparable credit, very simply, is they want to see what you have been able to deal with in the past historically to create a comparison or an idea of what they are going to lend to you now or in the future. To do that, they want to see that you can manage on-time payments with a clean history. So that's the first thing. Number two is the consistent information. Now, I would probably say the consistent or lack of consistent information is the number one reason why most businesses get denied, because the name and address may not match everywhere that these lenders look. And they look at a lot of different credit reporting agencies in order to verify your information. If there is a mismatch and they are unsure, then a lot of times that's the reason that, again, a lot of businesses get denied, not because they didn't have great revenue, not because they didn't have great potential, but just because their information didn't line up, right? Number three, a real business. Just like I said, just because you have a business established and set up and active does not mean that the business is set up properly. So you want to make sure that it has the professional structures. You want to make sure that it has all of the proper registrations, and you want to have some kind of presence online in order to verify your business and show that your business is actually in business of serving customers. And then again, all of this comes together to the end, to ties together into a smart strategy. Again, everything about funding is very strategic. Nothing about this process is random at all, right? So you have to know how to apply at the right banks, in the right order, at the right time, and understand, again, not every bank works the exact same. So let's break this down and go a little deeper, because again, we're going to really point out how banks think versus how we think that they may think, right? So let's look at two borrowers. Let's look at borrower number one, and let's look at borrower number two. So borrower number one, and these are two very realistic scenarios that bankers and lenders see every single day, if not a couple hundred times or a couple thousand times a day, right? So borrower number one, they have recent late payments. They're both applying for funding, right? Let's say they're both applying for, let's say, $50,000, right? So they're both looking for $50,000 to grow their business. They both have great potential. They have great ideas, and they're both looking for $50,000 from the bank, right? Now, both of them walk in, and borrower number one walks in. They have recent late payments. Their cards are maxed out or near the limits. Their addresses don't match. When they're asked for a clear use of funds, they really have no idea. They just like the idea of getting funding. And when they're asked for their documents to verify themselves in their business, it's scattered all over the place. The result of this particular borrower or applicant is that it looks uncertain, right? Now, on the flip side, let's say borrower number two walks in. They've got a clean payment streak. They've got low card balances. They're easy to verify because their name and their address matches their identification and the credit reporting agencies. When they're asked about their funding plan, they know exactly what they're going to do with it. They want to invest in the marketing. They want to get in staffing. They want to get a new location, et cetera, the case may be. And when they are asked for documents to verify themselves in their business, their documents are organized. The result of that profile is that it looks predictable. Now, I want you to understand, because my objective here today is help you figure out your first step to get funded. Everybody's first step is completely different. So I want you to understand that lenders are going to lend to borrower number two because banks prioritize the file that looks predictable. Now, I say that to say, if you're currently in a position where you're borrower number one, that's okay. It's just that we have to be aware of this problem so that we can solve this problem, so that we can position ourselves at a later date to access capital. It's not about where you start. It's about getting the information, the right information, applying it to you so that you can put yourself in a position to get access to capital. So regardless of whether you're borrower number one or borrower number two, I want you to understand the difference of how banks think, where you are, so that you can correct it. Now, if you are borrower number one, or if you want to put yourself in position to get to borrower number two, you have to understand how to position yourself. Because banks, and this is something I hear a lot, people come to me all the time. Hey, Dorsey, I've got a 700 credit score. I got a 750 credit score. I got an X credit score, right? Now, when coming to lending, I want to tell you that the credit score really tells you nothing as far as qualifications, right? Because there's a couple things that the bank looks at. The banks look at the full picture, not just the credit score. And most people are in the mindset or in the idea that when lenders are looking to lend or loan them money, that they're only looking at the credit score, and that shows a very, very, very small percentage of the overall picture to qualify for funding, right? So there are pretty much 6 things that lenders are going to look at in these different areas to determine whether you are going to be a great potential applicant for that lender, right? So number 1 is payment history. Paying bills on time or having a clean recent streak shows reliability. If there are late payments on the credit report, whether on the business credit report or the personal credit report, it's going to signal to the bank that there is financial uncertainty, right? So again, you want a clean payment history whenever you are going to apply for more capital. Number 2 is card balances. You want to keep the balances low. At the time of application, one of the data points that we look at is being less than 30% on a limit of each individual card. Now, let's just, Dorsey, what does that mean? Let's just make it very simple. Let's say you have a $1,000 credit card. 30% of that $1,000 credit card would be $300. So even though you have a full $1,000 credit card, you don't want to go over $300 or be over that 30% at the time of application for the lender. There are certain data points that we do and recognize and stay under to signal to the bank that we don't need their money and we are financially responsible. That is one of the data points that we look at, right? Number 3 is matching information. Your name and your address has to match even down to middle initials, right? So it should match everywhere, at the banks, at the credit reporting agencies, on your IDs, so that when you are asked to verify yourself, it is very easy because all of the documentation and reports are right there. Understand this. Your name might be Bob Jones, but you are not the only Bob Jones in the world. And most people think that we just have scores and all of this information stored at these credit reporting agencies. Now, what are the main credit reporting agencies that I'm referring to? It is TransUnion. There are 3 majors. There's a lot, but there are 3 majors. There's TransUnion, there's Experian, and there's Equifax. Now, your information needs to line up exactly across all of those because we are tied by information, names, and addresses, right? So because of that, you're not the only Bob Jones in the world. So if your information isn't lined up, your information could potentially be intertwined with someone else. And so again, lenders always have to be able to 100% verify you, not 90% verify you, not 95% verify you, not 99% verify you. They have to be able to 100% verify you in order to get you lending, right? Number 4, account age. Older accounts show more history. More history shows more stability. So older accounts look better because you have a longer history and you have a longer experience, right? Number 5, one of my most favorite topics to talk about is limiting inquiries, especially when we're talking about the credit score versus the credit profile. So on average, this is not an exact, but on average, inquiries, whenever someone inquires on your credit report, it is typically going to drop the credit score typically 3 to 5 points per inquiry. So most people look at this and they're like, oh, I'm just going to do a bunch of inquiries because I've got a high credit score and I'm not limited. The thing that, and it would be a common assumption just because for someone is looking at credit score. However, inquiries leave a record of how often someone is looking to extend you financing or looking to extend you credit or funding. And therefore, too many applications within a short period of time looks desperate. So inquiries are a natural part of this, but you have to be strategic in the process and that you deal with those inquiries. And number 6, staying organized. Have all of your documents ready and organized before you walk into a bank or before you speak to a lender. That way, again, you look prepared and you look ready to go. Now, that's on the personal side, but this is business funding. So you also have to know how to set up your business the right way as well, too. Because the reality is this: when banks see a real business, they send real money. But on the flip side, if they see a business that doesn't look as legitimate, then obviously on the flip side, they're not going to send access to capital, or there's going to be a very limited access to capital, right? So we're going to break this down in a couple steps. I don't want to make any assumption. So we're going to start at the bottom and we're going to work our way up. Now, I know that this is a trust class, right? So I can only teach you based on what I do and what we help clients do, right? So I know that this is a trust class. And the first thing I want to address is that absolutely you can build trust credit, and the trust can get funding on its own when the trust has either credit or verified assets. Now, what I teach personally, and there's not a right or wrong way to do this, again, everyone's particular situation is different. I can just teach you what works best for me. So, what works best for me and the strategy that I teach is to keep the trust private, right? So, when I am getting access to capital, I am leveraging state and public LLCs and corporations to operate in the best interest of the trust and keep my trust private, right? That is what works best for me. So when doing that, we have to have an LLC, or we have to have a corporation or a public entity in order to be registered and start to build business credit, right? So number one, you're going to register an LLC or a corporation with, every state has the Secretary of State. Then you're also going to get your EIN from the IRS, right? This legitimizes or establishes and registers your business in a public database. Now, when I do that, I also want to get a professional email. So we use websites like GoDaddy. You can also use Google domains, and you can go and use these sites and these platforms to purchase your website domain. So let's say, for example, your business is ABC Consulting. You're going to go get abcconsulting.com at GoDaddy or Google domains. And then when you do that, you're going to set up your professional email. So now, if your name is Bob and your business is ABC Consulting, it's going to be Bob at abcconsulting.com. That looks a lot more professional than just using like a generic Gmail or Yahoo account, right? It's these small things that seem so insignificant that really make a large difference. And it helps, especially whenever you're presenting your business as a professional business. Now, business address. You want a real business address, not a PO box. PO boxes get flagged a lot for potential fraud. So what I teach you to do is get something called an executive office. So I was looking at the cities. The reason I was asking this is because let's say you're in Atlanta, or let's say you're in Fort Lauderdale, let's say you're in Houston, or you're in Chicago, or you're in LA, right? For example, what you're going to do to get a business address, you're going to type in your city and state, and you're going to type in the words executive office afterwards. So if I'm in Atlanta, Georgia, I'm going to type in Atlanta, Georgia, executive offices. Philadelphia, Pennsylvania, executive office. Los Angeles, California, executive office. Houston, Texas, executive office. And when you do that, it's going to give you some areas that are what are called a shared space within your city and state. It's going to be a legitimate business address that not everyone has. It's going to be customized to your specific city, and it's going to seem a lot more legitimate and professional at a very, very low rate, right? Sometimes you can get these places for $20, $40, $50 a month. Sometimes, depending on the city and state, you can get them for $100 a year, but they're a little bit different prices depending on each city and state, but it's going to be a legitimate solution to verify your business and create that legitimacy and that trust factor, right? So that's the business address. Business phone. You want to have a business phone number that is separate, ideally, from your personal. It is going to legitimize and separate your personal and your business. And when your business starts to grow, you don't want people, excuse me, you don't want people blowing up your business phone, because the information that you have for your business is on public record. So that's why I teach business addresses and phone numbers, for one, legitimacy, but two, privacy, because I really want you to use capital to grow your business, right? The next part is a bank account. I consult with a lot of business owners who've been running their business and they don't have a business bank account. Again, you have to separate yourself personal and business. So your personal is going to have business, or your personal is going to have checking accounts and savings accounts. The same thing as your business. You need checking and savings accounts for your business as well to legitimize and separate your business. And then you need to have some kind of online presence, a simple website, a Google listing, and active social media profiles. Now, a lot of people ask me all the time, hey, I don't have all the money to hire all these developers and do all these different things. Well, awesome, because there's two simple solutions that you can get a simple website made for you. There are all kind of AI websites out here. You could Google AI website. You could go on YouTube. You can find all kind of AI websites. And if that can be done for you in a very, very short amount of time, sometimes literally a couple minutes, or you can go to a website like Fiverr, Fiverr.com, and you can pay someone very cheap in order to make you a one-page website. It doesn't have to be this extravagant, dramatic website. It just has to be a simple one-page website that verifies your business. And these little things go a long way. So I want you guys to do me a favor. We've covered a lot on the personal and on the business. I want you to do me a favor. And if you've seen some changes to that today that you might need to make either to your personal or your business, I want you to do me a favor and write those changes down. That would make your file look more predictable. And I want you to do me a favor when you do that, do me a favor and write either note in the chat, or if you want to be more specific, you can let me know some of the things that you will need to update and edit in order to make your file look more predictable. I'll give you about 10 or 15 seconds. I'll take a sip of water. I just want to make sure that we're on track. I want to make sure that we're identifying some of those problems so that we can provide these solutions. All right, cool. Got one note in the chat. All right, cool. Somebody's with us. There we go. Executive office and telephone. There we go. I love that. Executive office and telephone. Amazing. All right. Now, moving on. There are different processes and different pathways to funding, and everyone typically starts at one of these three phases, right? So the path to funding is not the same for everyone. Like I said, the first steps for you to get funded is not the first steps from someone else to get funded, right? Excuse me. So there are three pathways to a fundable business that we typically see. And there's either going to be a startup company, you're either going to have an aged business, or you're going to be going through some kind of acquisition in order to acquire the business. Now, there are pros and cons. I talk about these three areas. There are pros and cons to every one, and I want you to understand the pros and cons of each one so that you know where you are within the process. So the startup phase, let's start at the bottom and, like I said, work our way up. So the first phase is the startup phase. So the startup phase is you literally, just like it says, you're starting up the business, you're registering it, and you get a lot of creativity and flexibility from the beginning. So because you're building a startup from the ground up, you get maximum flexibility. You can control the name, you can control and customize the business, everything that you want it to from the very beginning. Now, a common misconception that I hear is that startups are not able to get funding. That's not true. Startups are able to get funding. We help a lot of startups to get funding. Now, couple things. Because of that, startups do have to generally be at least 30 days old in order to start building access to capital and business credit. But just kind of like how we talked about earlier, the older the age, the older the history, the more experience, the more reliable the applicant seems. So yes, it is possible to get startup or funding as a startup, but funding is a lot easier and more predictable with older entities, right? Which leads me to my next topic, age corporations. Some of you may have an age corporation already and you may not know it. So an age corporation is using a pre-existing entity with built-in history. Some people hear this word and they're like, what is that, right? So let's say, for example, you started an LLC or you started a corporation a couple years ago You had an idea that you were going to do, you started the LLC, you started the corporation, and then one thing led to another. You just didn't really do a whole lot with it. So it's just kind of been sitting for a couple years. Congratulations, you have an age corporation. Even if you haven't been using it, even if it hasn't made any revenue or anything of that nature, because an age corporation was a pre-existing entity, very simply a business started at an earlier date that has built-in history for the last couple years, because it's going to make your business look older and more legitimate that you have an age corporation. Now, you can, if you have an LLC or a corporation that you've just had to the side for a couple years and you just didn't use it for one reason or another, congratulations, you have an age corporation. That entity can still be very valuable to you and cut years off of the process whenever getting access to capital. Now, again, the reason this works is because the longest established history or the longer credit history, the more stable or experienced it looks. Therefore, you get a broader access to financing because of the stability of that entity being a couple years older. Now, if you have an LLC or a corporation already, great. I find those extremely valuable. The other thing with age corporations is that if you don't have one, if you didn't have one previously, you can use age corporations and purchase age corporations from other people or other businesses who do that, and you can fast track the amount of time that it takes you to get access to capital. Now, the pros and cons to age corporations, if you have one already, that's great. You just want to make sure that everything is up to date. Every state is a little bit different. So you just want to make sure that everything on that business is up to date. It is in active compliance. You can use age corporations yourself or you can acquire them. It's just very important that when you do deal with age corporations, make sure that they are legitimate and they do meet all of the current compliance measures for those states. If anyone ever needs an age corporation, shameless plug, we can match you with access to age corporations, right? Leading me to one of my next topics, which is acquisitions. So this is another way that we help facilitate deals and help businesses get access to capital is through acquisitions. So most people, when they think about a business, when they're looking at these phases, they think, hey, I'm going to go start up a business from the day one. Now, valid opportunity depending on the person who is doing it. Another opportunity for another potential business owner is an acquisition, which is acquiring an already business that has already performing, right? So you can buy a business with established operations, with revenue, with staffing, and with current client relationships that you get immediate access to revenue, and ultimately you can fast track growth and get immediate access to capital by leveraging what that business has already done. Regardless of what area you choose, these are the main three pathways in order to facilitate deals. The only downside to acquisitions is when you are doing acquisitions, you do need to work with someone or organization who knows how to properly do an acquisition so that you can acquire the right company, right? So those are the three different generally types of ways that someone will have a fundable business. But then when you are looking for funding, not every product is treated the exact same as well. And all of them have different benefits based on what your business actually needs, right? So there are 5 main products. There are really a lot more products when it comes to financing. We could talk about equipment. We could talk about so many other things. But for most businesses, there are 5 general products that you could look at in order to fund your business, and they all have different benefits, right? So we're going to talk about credit cards. We're going to talk about lines of credit. We're going to talk about revenue financing. We're going to talk about SBA loans, and we are going to talk about term loans. So credit cards are a great product for businesses for a couple things. Number one, the reason most people use business credit cards is because of the 0% introductory, right? So if you're not aware and you're paying a lot of interest for financing to do the things that you're doing, one of the very simple hacks that business owners use is 0% financing, leveraging business credit cards. So for example, if you weren't aware, business credit cards typically, depending on the lender, come with an introductory period of 0% for 6 to 12 months. Generally, some lenders do up to 18 or 24 months at 0% interest. That means, depending on the lender, on average, you're going to get 6 to 12 months or 6 months to a year to leverage financing at 0% that you can use in order to grow your business, right? All the different things we talked about earlier: marketing, staffing, product research, all of these different updates in order to enhance your business, right? So the reason that the people like the business credit cards is for the 0% introductory and access to fast working capital. It's a card, you can use it, you can leverage it immediately, right? Now, the next part is the business line of credit. So the business line of credit is beneficial because they give you a line of credit and you can use a debit card or you can write checks against it, and you only pay what you use, and it gives you flexible access so you can draw what you need when you need it, and you can put cash directly into an account, right? Now, the next option is revenue-based financing. So revenue-based financing is most of the financing we've talked about so far is credit-based financing, whether on the personal side or on the business side. Revenue-based financing gives you an option. If the credit is challenged, or if you just have a high revenue business, you can use that revenue in order to get access to capital. This is best for really the quick cash injections based on your business revenue. So sometimes they aren't necessarily longer term options, but let's say whether you have to finance something over the next 3 months, maybe to 12 months, a year, maybe like a year and a half at like 18 months. That's what those revenue-based finance options are good for. SBA, one of my favorite lenders, those are great, but the SBA is really beneficial for someone who is going to finance larger amounts over a longer period of time. Maybe it's 2 years, 3 years, maybe it's like 10 years. In certain circumstances, it might be 20 years or 25 years, right? So you're financing much, much larger deals over a longer period of term. Those can be used for SBA loans. And then we have something else, which are term loans, which are something that it's best for. It gives you access to cash, and it's really best for fixed and predictable monthly payments for something that you might be financing over the next, let's say, year to like 5 years. So every business has different needs, every purpose has different needs, and every business needs different types of financing based on the type of financing that it is looking for. So there's a lot of different options here. Not every option is the same or is the same value to each business. Ultimately, if it qualifies for it and if your business needs it, then it is fundable, right? Now, understand, life is all about relationships. Banking is all about relationships. So what we are in today, more than ever, currently, is relationship banking. Funding has become a very hot topic the last 3 years or so. And because of that, there's a lot of applicants. However, banks are going to prioritize relationship-based banking applicants over just any traditional applicant, right? So how do you actually establish building relationships with the bank and keeping your business in a high probability and safe category, right? So number one, when you're opening these banks, what do you need to bring? You need to bring a clear business explanation. Someone who has a business that they are used to explaining should be very short and direct with your clear or with your business explanation. It shouldn't be a bunch of ums. It shouldn't be a bunch of I don't knows. When they ask you what you do, you should be able to say what you do in 2 or 3 sentences, and they should be able to understand everything about your business. If they have additional questions as to your business, then you should be able to answer them in a short and punctual manner. You do not want this long, drawn-out business explanation, right? You want to be a couple sentences, direct and to the point. Now, when you're establishing banking relationships, you also want to bring deposit funds. Again, I see a lot of people who may not even have a business bank account. And then other times I see people have a business bank account, but they might not have any funds in the business bank account. You have to open the business bank account and you have to put deposit funds in those big bank accounts. Now, to clarify, one of the biggest assumptions I get is we have to put thousands of dollars in these banks whenever we open them. That is false generally. Now, there are some banks who do have a minimal based on their bank. Sometimes it's $150, sometimes it's $250, sometimes it might be $1,000 or $2,000, or if there's some of those higher wealth management banks, they can be higher. However, typically speaking, you don't need a whole bunch of money to open the account. Generally, in most banks, you can probably open the account with $50 to $100, right? Now, the more money you have, the stronger that relationship is going to be. But the most important part that I want you to get you to understand this is that I want you to just get started within this process, right? Now, the next thing, you will have to bring your personal ID to make sure that you can verify yourself, and the entity documents, because you have to be able to verify yourself and your business. Now, number two of this is best practice. Kind of what I was talking about on the business explanation. You want to keep it short and direct. Someone who is professional and used to explaining their business is going to do it in a very short and direct manner. You always want to focus on long-term relationships. Banks are now creating barriers more than ever before because they want applicants and businesses to work with them for the long term. They don't want them to come to this bank, get financing or funding, and leave. They want to see how they can facilitate that relationship or those products long term. So banks are heavily focused on long-term businesses and long-term applicants who are going to use their products, right? Anytime you're opening an account or you're dealing with financing, show up early. Do not show up on time. Absolutely never show up late. Show up early to show that you are ready and ready to go. And again, you want to use low risk explanations of your business so that you don't get put in these high risk industry categories, right? And then what to ask when you're starting to build the relationship. Again, everything is very strategic. One of the questions you want to ask is, what credit bureau do they pull? Now, remember, there are three major, there's a lot more, but there are three major credit bureaus and credit reporting agencies we're going to look at. We're going to talk about TransUnion, Experian, and Equifax. Most people assume that every bank pulls all three of those credit reporting agencies, but that is false generally. So how do you find out? Most banks will pull one or two of the three. Most banks don't pull all three. So how do you find out which credit reporting agency the banks are going to pull? You're going to ask them, hey, I'm looking for a business credit card. I'm looking for a business line of credit. I'm looking for an SBA. I'm looking for a term loan. Just out of curiosity, what credit reporting agency do you review in consideration for this application? Because let me just take this to a high level. There are three credit reporting agencies: TransUnion, Experian, and Equifax. There are inquiries on all of them. Now, let's say, for example, I go to three banks. One of those banks pulls TransUnion. One of those banks pulls Equifax. One of those banks pull Experian. So as a total, if I do this properly, as a total, I was able to go to three different banks and get one inquiry per bureau. So one on TransUnion, one on Experian, and Equifax. So in the grand scheme of things, if I'm able to structure this and go to three different banks that pull three different inquiries, and I'm able to get three products, I was able to go to each bank and get one inquiry and get three products instead of three inquiries on one bureau, right? If you catch that, or if you have questions about that, ask me at the end. But this is how you can leverage multiple banks and get very strategic in this without running up a lot of inquiries, with being very strategic. Now, how do we find this information? Like I said, we ask the lenders and the banks what credit reporting agencies they review from so that we can structure the deal the right way. Number two is, can you apply for multiple products? So most people, when they go to a bank and they apply for, let's say, a credit card or a loan or an auto loan or whatever you're applying for, most applicants think, hey, I can only apply for one product. They don't realize that sometimes when you go to bank, depending on the lender, you can get one, two, or multiple products with one inquiry. So for example, I might be going to a bank and I might just be looking for a business credit card and not realize with that same inquiry, I could get a business credit card, I could get an auto loan, and I might be able to get a term loan from one inquiry at that bank, right? So understanding the ability to get multiple products. What documents do you need? Ask them. Certain lenders need a lot of documents. Certain lenders only need a little bit of documents. Certain lenders need no documents. How do you know that? You're going to ask them, what are the documents you need to apply for whatever product you are looking to apply at that particular time? And then also the fourth question here is, what is the timeline? Understanding relationship banking, some banks allow you to apply immediately. Some banks, however, may have a threshold of sometimes it's 30 days, sometimes it's 3 months, certain banks it's 6 months where you go open the account, but you can't apply for funding or access to capital within that time period. So you want to ask, what's the timeline to apply for funding or get funded at that particular bank or lender, because that's going to matter. If you need funding in 30 days to close a real estate deal as a down payment, let's say on like a fix and flip, you don't want to go to a bank like Regions where you have to wait 6 months before you can apply for financing, right? So these kind of things are very, very important to understand whenever you're looking for access to capital. Oh, hold on. There we go. My bad, having some technical difficulties. I will get right back into there. There we go. So we have, oh no. All right. So I guess we're just going to have to pivot. Sometimes technical difficulties just happen. Let me try this one more time. Let me try this one more time to enlarge this. And then if not, we might just have to do. Yeah. Okay. All right. So unfortunately, for some reason, it's not going to be as clean. So you might see a little bit of a head, but that's okay. We're not going to let it stop us, right? Sometimes we have to pivot. Sometimes we have to change, and we're not going to let anything stop us, right? So we've covered a lot of information about the personal, about the business, about what you need to qualify for, the different products, how you can actually put yourself in position, and understanding relationship banking. So we've covered a lot. Again, every time I'm here, I always want to provide as much value as I can and always want someone to learn something. So if this has taught you something new today, or if you are finding this valuable, I want you to do me a favor in the chat and just type the word win, just so that I can see who's following along and making sure that you guys are getting some value along this. Win. Okay, perfect. Yep. Awesome, awesome, awesome. I love to hear that. I love to hear that. I love to hear that. That's what I want you to do, is I want you to get a lot of this information so that you can take this information and immediately apply it to your situation and understand what it actually takes to get access to capital. Now, with that being said, again, the reason I talk about the different points, regardless of where you are, because it's not about where you start, it's about where you end up and getting the information to change your situation, right? Because information truly does change situations when you apply that information. So the reason I say that is because everyone who starts with us, we work with a large variety of clients, right? From startup companies who might be looking for their first funding deal to multi-million-dollar acquisitions, right? Everyone starts at a different level. And because of that, I like to give a couple different scenarios for clients who have worked with us or who have attended these master classes and used this information in order to grow their business. So I do have a couple different case studies that I do want to go over. Just kind of how I mentioned in the beginning, no funding deal is the exact same. Everything varies for a multiple of reasons for multiple different applicants. So I just want you to understand, I do have some case studies I want to go over. Past performances do not guarantee future results, right? Lending and funding is an industry that changes probably more rapidly, I would say, than just about any other industry out there. And sometimes there are overnight updates that change, right? It's just a part of it. But when you understand the framework, this is how you understand to put yourself in position, right? So a couple different case studies and a couple different scenarios for a couple different people who have worked with us or who have attended our class, right? So the reason there's like 3 or 4 different stories I'm going to use, and they all have different reasons for me sharing them, right? So the first one is I want to talk about Marcus. And Marcus I like because, again, funding has become a very, very popular topic. It's all over YouTube. It's all over social media. And as someone who's been in this industry almost a decade, I do have to say the downside of this industry is that there's a lot of misinformation out there, right? And there's a lot of information that isn't necessarily applicable to a lot of people in a general circumstance, right? And Marcus is one of those examples, right? So Marcus was an aspiring entrepreneur Ultimately, he came to us with a 590 credit score. Now, the problem was he was denied by multiple banks. And the reason is because he saw all this information and content online that said, go apply at this bank and get this approved. And right, he was following all the gurus and all these different things, and it just wasn't working. So he came to us and he's like, hey, this funding isn't real. Funding isn't possible. I've gone to every bank that every, person, every guru on social media talked about, and it's not possible for me to get funded. And it's not possible for him for that particular scenario because he didn't get the information that you've gotten today, right? So when we looked at it, we really understood that, hey, he had outdated addresses, he had high credit card balances, he had late payments, and he really just thought funding wasn't an option because he didn't understand the process to get funding. He just thought, hey, I'm gonna go to this bank, everybody's going to this bank, I'm gonna submit an application, they're gonna give me all this money. False. That is not going to happen. That is never going to happen. There is a reason that things happen, and it comes from a very strategic process. So what happened was we helped him identify, hey, you've got outdated addresses. Hey, you've got these high balances. You've got these late payments, and this is why you're not in a position to qualify for the funding, even though the banks that you're going to are great banks. They're just not applicable to your current situation, right? So we helped him identify those things, gave him the resources to clean up his credit, help him lower his utilization, build positive reporting balances in history. And based on that, and then leveraging some of our relationships, he was able to go from a 590 credit score being denied everywhere, not really understanding what was going on, where he was able to go to the current biggest bank in the United States currently, Chase Bank, able to get $75,000 from Chase Bank to leverage at 0% for 12 months that he was able to use to invest into his business, ultimately launching a new business, investing in marketing, bringing on staff, hiring new equipment, all without actually touching his own savings. So I like this because he came to us frustrated, following all of the misinformation on the internet, really understanding the same exact process that I've taught you today, and he was able to turn around his situation in order to get access to capital and grow his business, right? So Marcus is a great example. The next one I like is Michael, because sometimes the people we work with are already established business owners. They already got six-figure companies. They've already got seven or multiple seven figures or eight figures or multiple eight-figure companies, but they are leaving a lot of money on the table by not realizing the other lenders who are there, right? So that was the example here with Michael. Michael was already an operator. He already had a successful business. He already had everything going for him, right? The problem is he was financially monogamous. He was using one bank, and he had been using the one bank forever. And he assumed that loyalty would get him where he needed to go. However, what he came to find out was that the offers from his one bank were very conservative, very slow, very low amounts, and he needed acquisition capital. So what we helped him understand was, hey, a lot of six-figure operators are financially monogamous with one bank. However, wealthy operators or smart operators are going to make multiple lenders compete for their business. So we helped them understand a little bit more strategy that, hey, you're not limited to this one bank that you've been with for so long. There's over 4,000 banks in the United States alone. Let's figure out which one is going to give you the best business. So what we did was we understood how to match them with these lenders, how to go based on the information. And ultimately what we did was we helped them understand, hey, we're not here to tell you that your bank is bad and you need to move. We're just here to say, hey, let's look at some other options for what lenders may look at your profile so we can find a more favorable lender. Again, I'm going to say it over and over again, to his specific situation. And we were able to do that. And if you see over here on the right, he was actually approved for a little over $300,000. I think it was like $350,000, $330,000. But at the end of the day, he only accepted the $300,000 that he needed to do his deal. So understand that, again, a lot of this is coming into strategy, and there are more opportunities out there than what you may realize. And then the last one here I like to use is a guy named Eric. This is a huge case study for me because I love non-believers. I love taking non-believers and turning them into a believer because they can be one of the biggest advocates. That is the scenario with Eric. Eric is a couple of examples of that, and the multi-product example. So Eric pretty much ultimately grew up, and this is why I kind of talked about lenders and bankers being in the business of lending money, because Eric was on the flip side of that. He had been a 10-year entrepreneur. He had run a business, right? But he thought that debt was bad. He thought that lenders and bankers were against him. He thought that he just didn't understand, right? So he was trying to grow this business. He had done very well. He had bootstrapped everything for 10 years, but just the ebbs and flows in businesses, sometimes you just get to a point where you have to have access to capital to scale, right? It's a natural progression. And ultimately what we did was we helped Eric understand banks aren't your enemies. You can leverage them to fund and capitalize the ventures that you want within your business. So that's ultimately what we help them understand, is there actually can be leveraged as investors if you understand how to speak their language and how to position yourself. So that's ultimately what we did. We helped him understand how to leverage multiple banks. We helped him understand how to position himself. And ultimately what we did, we used a bank that you may or may not be familiar with. It's a bank out in the Midwest. It's called Key Bank. It's a great bank. With Eric, we were able to facilitate this deal. We were able to go to one bank, Key Bank, get two products. Again, different products have different benefits for different businesses. So we were able to go with Eric. We were able to go get a $50,000 line of credit and a $40,000 business credit card, $90,000 in funding from one bank, learning and understanding how to position himself and acquiring capital based on what his business actually needed. Now, the reason I go through all of these in these different scenarios is if I haven't made it clear enough up to this point, funding is not luck. It is a system. It is a very methodical process for all of these different nuances together that add up to the result, right? The clients you saw, they didn't get lucky. They really just followed a proven strategy, which is the same one that I've spent about the last 45 minutes or an hour or so breaking down to you, is actually how to position yourself for capital. They had a roadmap. They knew which banks to approach and when, and they understood how to structure their credit and business in order to qualify. And this is the power of a real playbook, by understanding how you're going to position yourself for capital. So I know that we covered a lot. I want to pretty much summarize this into pretty much 4 phases so that you can identify which phase you're in so that you can get to the next phase, right? So phase 1 is you want to get all 3 of your credit reports, again, from TransUnion, Experian, and Equifax. You want to review the information. You want to make sure that your name and your address matches everywhere, because when you pull the credit report, oftentimes you're going to find that there's a lot of information on there that may or may not be accurate, right? You might be a little surprised. So you want to make sure that you match your name and address everywhere, and you want to address any negative remarks first. So that's phase 1. Phase 2 is the stabilize and then the prepare. So you want to make sure that you can manage your card balances. You want to make sure that you have those business bank accounts open, and you want to gather all of your key documents for you and your business. Phase 3 is verify and plan. This is when you're going to identify your strongest reports, based on the credit reports that you viewed. You're going to map out which banks to approach first, and then you're going to get pre-qualified with those banks after you speak to those lenders based on the questions that you ask. What do you pull from? Do you pull multiple products? What documents do you need? All of that, right? And then phase 4, you're going to execute and review. You're going to apply in smart sequence. You're going to log the results and adjust. And then based on the information and data that you got from the banks, then you are going to plan your next round. So that is the 4-phase roadmap in order to get in position how to execute. A lot of questions I get is, what do you need to qualify, right? So this is pretty much the meat and potatoes of how you actually get there. So there are 3 C's, what we look at, what are called 3 C's when it comes to funding. The 3 C's are credit, cash, or collateral. So when you're looking for funding, you either have great credit, personal and or business credit. You either have cash flow, either in personal income or business revenue, or you have assets that can be used as collateral in order to get financing. Every financing deal comes down to one of those 3, or a combination of those 3. It's going to come down to credit, cash, or collateral. Now, Credit-based qualifications, I really hate talking about credit scores just because it's not the best expectation or indicator as to what really someone qualifies for. It's really about the profile if you haven't gathered that as of yet. But generally speaking, if it's going to be credit-based qualifications, you will typically need a 680 plus credit score across all three credit reporting agencies. You do want at least one major credit card from issuers like Visa, MasterCard, Amex, which is American Express, etc. Discover as well too. You want at least 1 year-old credit card with a $2,000 plus limit. Again, these aren't absolute determinants, but going back to what I was talking about earlier with the comparable credit, lenders want to see what you've dealt with already in consideration to what they are going to lend for you in the future, right? No derogatory remarks or late payments within the last, no derogatory remarks. So derogatory remarks are like collections, charge-offs, bankruptcies, negative information. No late payments, really ideally within the, or minimally within the last 12 months, ideally within the last 24. So a year to 2 years, no more than 3 new inquiries within the last 6 to 12 months. And you really want your card balances between 1 and 30%. So those are kind of like the credit-based qualifications, what to bring in and what you'll need. You will need, like I said, your personal ID and your driver's license, proof of address, which can be utility bills, leases, your EIN letter from the IRS. So you want to make sure that you have that. Your articles of incorporation or the operating agreement. Really, you probably need both of those. Business bank statements, if applicable. Some lenders will ask for proof of income. Some lenders will not, depending on your credit. So sometimes you will need business bank statements, and you will always need an explanation of your business and use of funds. Now, we've covered a lot of information. You've gotten a lot of great information that you can apply immediately. And now the ultimate question is what's next? Because at this point, you really have 2 options. So you can take everything you've learned today. I've completely opened the playbook. I've completely opened the curtains, and I've showed you exactly what you need to qualify for funding. So you can take what you've learned today and you can go and do it yourself. If you do, please tag me or let me know. Just show me the results that you've gotten. And if you do, you'll be better prepared than 99% of the people that are out here just randomly applying for funding. Or you have the opportunity where you can let our team guide you every step of the way, right? So we can provide those personalized audits. We can create those custom funding sequences based on the relationships and data that we have. You get expert strategy, structure, and support from start to finish on a white glove service from beginning to end. And you get access to our proven network and resources, regardless of whatever way you go. Whether you do it yourself or whether you work with us, I want you to take action, because either way, you now have a roadmap. You know exactly what to do. You know what to position yourself to qualify for. You know both of your options. And the only question is really, how fast do you want to execute and move, right? So a lot of people ask me, they're like, hey, Dorsey, I would love to work with you. It's probably thousands of dollars to get started with you in order to service. So the way that we work is, I don't believe in over-promising and under-delivering. I believe in delivering the value. Once the value and consults are delivered, then I believe in actually in being getting paid for our time. So the way that we work is we are a performance-based organization. What that means is that there are no deposits, there are no retainers. Us and our staff take on the full responsibility, and we only get paid after you get funded. So the way that it works, we don't charge up front for our services. We do charge based on the intellectual property and the consults that we deliver. So the way that we work is we don't charge anything up front for our services. We do simply earn a 10% commission of any amount that we get funded, or any amount that you get funded, which is paid to us after you actually get access to the capital. So we provide all the intellectual property, we provide all the consults, we provide all the time and the coaching, we walk you through the funding process, and then we get a 10% tip after we complete those services, right? Now, I'm a very transparent person. I love to work with who wants to work with us, and I want to be able to still provide value to those who may not and be able to go out and execute. So some people hear 10% and think that's high, but here's what this actually really means. It means that there's no guesswork, there's no retainers, and there's no risk. I love this model because if we don't deliver the results, then we obviously don't get paid. We have a proven process with expert support, and real banking relationships, and you ultimately save time, avoid costs and mistakes, and walk into funding with confidence. You don't have to know banking. You don't have to be the expert at credit and funding. You just have to be able to follow the things that we teach. Because the reality is you're not paying for a maybe. You're investing into strategy, results, and momentum only after those results are actually delivered, right? So what's going to happen in the chat? 7 ways. And Christina, they're going to have a link in the chat. All you are going to do is you are going to click that link. It's going to take you about 30 seconds to fill out some basic information, and then you are going to be able to schedule a one-on-one with someone from our team to start walking you through this process. So they're going to put a link in the chat. All you have to do is click that link in the chat, regardless of what area you're at, whether you think you can get funded tomorrow or whether you think it might be a little bit of a process to figure out what you need to do to qualify yourself to get funded. This is where we want to be of service, and we want to help you take out the guesswork, regardless of whether you decide to work with us long-term or not. We want to take out the guesswork and actually help you figure out what the first steps to get funded are on your journey. Now, next steps here, again, when you click that link, you're going to fill out the information. It's going to take you about 30 seconds. Now, to fill out the information, and I want to explain what's going to happen. So when you click the link, you're going to fill out some basic information. After you fill out that basic information, it's going to pull up a page. You're going to be able to book a one-on-one time with someone from our team. Now, very important. This is very, very important because I want to make sure you have the best experience possible in working with us. So when you book, immediately check your spam or your promotion folder in your emails. You're going to have the confirmation. There's going to be some links, and there's going to be some videos that I personally shot to help and set all of the expectations as you go through the process. So please understand to check your spam and your promotion folder immediately for that information. Now, couple notes. We are primarily a text-based support team. So a couple things. In addition to the email confirmation that you're going to get, which is going to have some information for you, you're going to get a text confirmation as well too. Please understand that, yes, that's an automated text message, but there is someone on the other end of that line who will communicate with you to help you understand. So if you have any questions, if you have any concerns, please text us. We are primarily, and I capitalize, text-based support system, because if you want the fastest responses, please text us. Please, because I'm saying text us, please do not email. Please do not. We get a ton of emails. I'm going to be honest with you, there is a very minimal chance that your email will be seen. However, if you text us, you will get a timely response. Responses can take 3 to 24 business hours. Honestly, most of the responses sit somewhere between 1 and 6 business hours. Now, the call that you are booking is the intake call. So we're scheduling to help you figure out what your first steps are. You're doing a free call with someone from our team to get your information, help you walk through it, and identify where you're at. So very important. We run a professional business. We expect all of our clients to operate as a professional as well too. So understand, when you book the call, it is scheduled for 30 minutes on Zoom. Yes, you must show up to a Zoom call. Just like I talked about earlier, you must show up on time. If you are late by more than 3 minutes, you will have to reschedule. We have a lot of clients. Again, we as a professional business, we expect to work with professionals. If you are going to be late or if you need to reschedule, please text our team ahead of time so that they can address that, right? Because you are expected to show up on time or early. You must be at a computer. We are uploading and downloading documents. The mobile version of phones sometimes just wastes a lot of time and there's a lot of extra steps. So yes, you must be at a computer. And we are doing a pre-qualification for you and your business. So yes, you have to share all of your personal and business information with us in order for us to create that pre-qualification. So you do need to have all of your personal and business information ready to share with us so that we can properly diagnose where your problems are and be able to provide those solutions. So with that being said, that is the end of the presentation. I try to be as simple and streamlined as possible. Of course, I do leave time at the end to go over questions that you may have throughout this process. So I've got about 15, 20-ish minutes to run through as many questions as possible. Please, let's just everyone, I would love to get to everyone possible. So let's please, if there is more time, because we only have about 15, 20 minutes, if there is, please leave your questions to 1 or 2 questions max. Please try to be as direct as possible so that I can get your questions answered. And then if there are additional hands at the end, of course, or if we cover all the questions and you have additional questions outside of those 1 or 2, then yes, you can get back in line. But we do just want to be mindful of everyone else who may have a potential question. So we will go ahead and get this started. The only hand raised that I see at this point is Stephanie Christie. So you can go ahead and unmute, and I would love to answer your question.
Hi, Brian. I just had a quick question. Typically, to get funding, how long after filing bankruptcy would that become an option?
It is going to depend on a couple different factors. So a lot of times when there's bankruptcy, like if it's within the last year to 3 years, it can be a little challenging, depending on the level of either your personal income or the business revenue. So bankruptcy is going to affect the credit, but there's going to be different options based on the actual income level, whether you could secure financing or not.
Okay, I do have a W-2 income, um, and I don't have a business started yet. Do you actually have to have a business formed and in place to get the business funding?
Correct. Yeah. So to get business funding, yes, you would have to have a business entity in order to get business funding. We can do personal funding as well too. So if you're just looking for funding or cash, or you need help starting up that company, we can facilitate that. But yes,
Okay.
you would need a business and a business entity to get access to business funding.
Thank you. I did submit the form, so I appreciate it. Thank you.
Awesome. You're very welcome. You are very, very welcome. All right. The next hands in line I do see is Miss Melody Murray. You can go ahead and unmute, and I would love to answer your question.
Hello, Mr. Brad. I guess my question would kind of piggyback off of Miss Stephanie's, because I'm wondering with the business credit stuff, my personal credit is probably like certified crapola, I'm sure. So how do you get business funding that's not reflected of your personal life at all? Is there any way to get business funding based solely on the business without, a grantor or your personal credit being used in the assessment?
So, phenomenal question. Generally speaking, for most people, I'm going to give a general answer and then I'll give a specific answer. Generally speaking, for most people, no. There is going to be some consideration of personal credit at some point in the process. The only time that personal credit ever doesn't really become a factor is if your business has established business credit already. So it has to have established business credit scores, be able to be identifiable in the business credit reporting agencies, but it also needs documented income. Generally, what that's looking for is transitioning over to something called corporate credit. So there's business credit and then there's corporate credit. Corporate credit is when your business has strong enough business credit to get financing on its own. So it's going to need established business credit. It's also typically going to need verifiable revenue somewhere minimally between $2 and $10 million a year. Most people generally don't have that. So if you had that, yes, but if your business isn't currently in that situation, the first step would be to fix the personal credit first so that we can clean up that and then create those comparable limits to get over to business credit.
Okay. Well, okay, and seeing about the requirement between the 2 million and 10 million per year kind of sparked something that I saw last night. I don't know, some TikTok where it was saying that if you purchase a life insurance policy and put it in your trust, that, like, say for example you purchase $1 million life insurance policy and you place it in your trust, that then brings your trust value up to $1 million. Is that true, or is that like a, I don't know, not true? or
So
do you
I'm
know?
not the expert in those. I know Christina has other people who actually talk about those kind of things. Um, I can only teach from my perspective. I'm not the expert in that. We've done deals where when it goes back to like those collateral, so those three C's, credit, cash, or collateral, we've done
Mm-hmm.
deals like that, but it's based on the actual cash value of the policy, not necessarily the policy coverage amount. So from my experience, again, I can only tell you from what I've done, it's not as simple as just getting $1 million policy and putting it in the trust. It's based on the cash value that is actually built up through that policy. Does that make sense?
Okay. Mm-hmm. Okay,
Okay,
thank you.
of course. All right. I don't currently see any other hands raised, so let me scroll back. Obviously,
Well,
if there are
I,
some
I,
hands,
I have one more question if it's not any hands raised.
okay, go ahead.
Okay, I know this might be slightly random, but I figured it might be a funding question. I wanted to know, how was Mary Kay able to do that pink car thing legitimately?
So Mary Kay would do a lot of like, so that's more like network marketing. I'm not in Mary Kay specifically, but there's a couple different ways that people can do it. I've been in network marketing before and actually have hit those car bonuses. So some companies will go and do like fleet financing under the business, and they'll just kind of lease the car to the brand ambassador, who has who does qualify for the car bonus. In other network marketing companies I've been in, you have to be able to qualify or go get the car on your own, and then the company, that network marketing company, would just send you like a stipend or like some kind of car bonus towards towards that amount. But every company
Okay.
is going to be a little bit different. I'm not an expert at Mary Kay, so I'm not really sure. But
Okay.
it would be, yeah, it would just be one of those.
Okay, thank you.
Of course. All right. Looks like Fred White, you did raise your hand. You can go ahead and unmute and ask your question.
All right, great. First of all, good afternoon, Mr. Brian. I wanted to ask now, with what you do, it's kind of like transactional, but do you provide strategy throughout that process, or is it just transactional for what you need, or what I would need from you?
Understood.
And that's my
So
question.
our process is a white glove service. You learn a lot working with us. So it's more of a done with you process. You get a lot of coaching. You learn everything that we're doing, why we're doing it, how it benefits you short term, how it's set up for you long term. And it's you learn a lot. So you're going to work one on one with one of our coaches who you can ask your questions. And again, you're going to get a lot of coaching from really start to finish from those strategies. So it's not just like a transactional relationship. It really is a done with you process that involves both of us working together in order to get to that result.
Okay, great. Thank you.
Absolutely. All right. If anyone else has any hands raised, you can. I'm gonna work my way back through the chat. I did see a couple things that I just wanted to try to make sure we're on top of. So let me just kind of scroll through here really quick. Fred, you can go ahead and unlock. Or sorry, you can go ahead and unmute. You did raise your hand again. Go ahead.
Okay, thank you. I asked about the strategy because with me, I'm kind of new, well, very new to this. And even though I'm getting it, I'm trying to make everything fit in my head. Um, with me being new as I am, I kind of don't know what questions to ask right now. That's why I asked about the strategy, because I don't know what I don't know. I don't know yet. And I know I need help with that.
Well, that is perfectly okay. Like I said, we work from startups who securing their first deal and might not know how to navigate the landscape at all, or we work with multi-million-dollar established companies. So naturally, yes, you're going to learn a lot. You're going to gain a lot of questions. This is one of those. Again, this is not like a one size fits all for every single person. So there is a lot of coaching. There's a lot of strategy. There's a lot of time for you to work with one of our advisors or one of our team to make sure that you have all of your questions answered. Make sure that it's a very transparent process, because funding is not just like a sign up and we get you the money automatically. You know, like there's a lot of working back and forth together to make sure that you are educated and coached properly in order to get through the process. So if you don't know the questions today, that's fine. As you work with us, you're going to learn a lot. And then if you have questions that come up, you can ask the advisor whenever you talk to them. Or like I said, we have a great support team. You can always text our team, and they'll be able to answer your questions as well.
Thank you, Mr. Bryant.
Of course. All right. It looks like Marsha McLean.
Yes, sir. How are you, Mr. Dorsey?
I'm good. How are you?
I'm good, thank you. So I have a nonprofit. So do you support nonprofits with getting capital as well?
We typically outsource most of our nonprofits just because it goes into grant writing. Nonprofits are typically more of a grant process, and we just don't specialize in grant process. It's very possible we just outsource because it's not as streamlined. It's more grant proposals, pitching, and kind of waiting. We go more of a streamlined process, whether it being either with credit, cash flow, or collateral. So we have resources for grant writing. It's just that we specifically don't offer that service.
Thank you.
Of course. All right. Yep. So great. Looking at the chat. Thank you. Rhonda Butler says for Illinois, look up Illinois Executive Office Suites. Yes, that can be another good, a good search option. LG attendee said, will we need to divulge our social security number or personal ID, or can we use a driver's license to open a business bank account? So anytime you are actually open a business bank account, banks are always going to go through a KYC process, which stands for Know Your Customer. So they will have to verify your social as well too, as your ID. So not with us, but yes, when you go open business bank accounts, they will ask for your social and verification. Troy Winston said, what is your fee, or how much do you charge to convert business and personal credit cards to cash? So there is a liquidation process. I don't actually normally get this question a lot, but it's a great question. If you do have credit cards and you do want to liquidate them and pull cash off of them, basically, and avoid those those high cash advance fees, there are strategies we teach you how to liquidate if you go through the funding process with us. We can teach you how to liquidate those without actually paying those fees. The other thing is we do have a resource. So some of our clients do want to liquidate cards or pull the cash from their card. If you do want that resource, that's not us, but we do have a third-party trusted resource. It's typically like 10% for same day, or so for like same day, or within like 24 hours, it's typically 10%. Standard is usually 3 to 5 days, and that's 6%. So again, we don't do that. We have a trusted partner. You would facilitate them, and they would go through that particular process. That would answer Troy Winston's question. And then what can we do to build up? Henry May said, what can we do to build up your credit score? It's going to be one of those depends questions. It's kind of like, I don't know without seeing the credit report. The best thing that I could say is when you schedule it and you communicate with our team, we can identify exactly what problems that you may be having and how to fix that so that you can increase the credit score. Sometimes it's a credit repair thing where you have to dispute some of the negative information that may be on there. Sometimes it may be a situation where you just have to build credit. And that's going to be different based on, again, really where you are. Jose Torres says, do we offer assistance and services to, hold on, I got zoomed down. Jose Torres says, do you offer assistance or services for consolidating debt? Do you review all the cases in your company? So I don't particularly know, but my team does, and my team is great as far as reviewing all of the cases. Do we offer assistance and services for consolidating debt? Yes, that is a potential option based on where you are as well too. So yes. Melody, okay, I already answered that question for the grant proposal. D'Angela Watson said, what if my family has a daycare LLC that was set up in 2013, but hasn't been in operation since 2017, but does have a bank account? Can we get funding for that? Thanks, Brian. We appreciate you. So that would depend on the state. And if it hasn't been in operation since 2017, every state is going to be a little bit different for how long an entity can be inactive. So the reason I say that is if generally, well, depending on the state, there's an annual fee. Based on that annual fee, some states won't allow you to reactivate that business if it goes past like 2 years. Sometimes it's like 10 years. So it just depends on the state, and if you said it hasn't been in operation, but just because it hasn't been in operation doesn't mean that the annual fee hasn't been made. Businesses can still have active bank accounts even if they're not active with the Secretary of State. But when you actually go for funding or looking for to open up a new business, or open up a new bank account, they will go back to that Secretary of State to see if it's active or not. So the answer to your question is it really depends on how long that business has actually been inactive with the Secretary of State, not necessarily just how long it hasn't been in operation. So I hope that answers your question. The other question Deanna Watson asked was, would a personal or business bankruptcy affect anything? A personal bankruptcy would affect it. The business bankruptcy, depending on the strategy, it may be better to just go with a new entity. I will tell you, typically, business bankruptcy is better. This is not financial advice. This is my particular opinion. Sometimes business bankruptcies are better because it could just affect that business. But I'm just saying we have the ability to open multiple businesses, right? So if your credit is good and depending on how it was structured, you could restart a new entity based on that, right? So the answer to that question is it really depends. And then Melody asked a question, but are any of your grant writing service recommendations white glove service like yours, like hold your hand step by step, helpful? So we do know grant writing coaches, so that the grant writing services we know that do it for you. No, they just literally, they'll go through a process, they'll go through your business, and they'll literally, based on that onboarding, they'll create all of those pitches for your business. They don't necessarily teach you how to go through the process, but then we have other people who do teach you grant writing where they don't actually do the service for you, where they will teach you step by step how to do it on your own. So I hope that answers that. Bankruptcies typically only stay there for 7 to 10 years, depending on the type of bankruptcy. Depending on how it's reporting, whether on the business or the personal, you do have options where you could dispute that, right? So that's a process as well too. Depending on where you are. So a lot of times when someone has a bankruptcy, I typically tell them to go through credit repair to dispute the accuracy of the reporting of that bankruptcy. And sometimes it's a possibility for someone to get that bankruptcy removed. So everything in this industry comes down to information and how that information is aligned and if it's actually reporting accurately or not within compliance. So I hope that does help. The best thing I would say is that these are phenomenal questions. Like I said, regardless of whether you think you can get funded immediately or whether you think you might have to go through some kind of process to get funding, I always tell you, go ahead, come with our team. Let's identify if we can get you funded immediately or in a short time, we will take you on as a client. And then if not, if there are some things that you do need to correct first, we let you know exactly what has to be corrected, and we give you all of those resources in order to do so. So I don't see any other questions in the chat. I don't see any other hands raised, and I do only have about 2 more minutes anyway. So I do appreciate your time. I hope that this was valuable. If you would love to figure out the first steps to get you funded, we would love to facilitate you in that process. You'll just go through that link, fill out the information, and I assure you one of our team members will facilitate you through that process. So Christina, 7 Ways, I appreciate you. As always, I hope that this was valuable. Anytime you need me, I'm always here. I do look forward to coming back and always sharing all of this information with the community.
Yes, thank you so much, Mr. Dorsey. I appreciate you so, so, so much each and every time that you come here on the workshop to pour into the community. And I know that the community, they really appreciate you because you are a wealth of knowledge and now you are their trusted resource. So those of you guys who are ready to take your funding to the next level, you need to go ahead and click on that link so that you can get on board with Brian and his team, and they are able to assist you. And it doesn't matter if you feel like, oh, I have a blemish on my credit, like they will be able to guide you in the right direction. They are our trusted source and your go-to person. And I'm so grateful that Mr. Dorsey is one of our educators here. So thank you so much. I appreciate you, and you have a blessed and highly favored day as always.
Thank you. Bye.
Bye. All right, you guys. So I want to know, how was the session on funding and credit? And then I'm opening up the floor so that I can answer all of your questions based off of the information that we went over today. So today we went over banking, we went over having a board meeting, we went over documenting how much you're going to fund the trust with, and we went over the EIN application for the business trust. So I'm here to answer any and all questions that you have. And I just want to know, how was your session? So how do you feel about business credit and funding and you being able to get OPM so that you can acquire the assets? And we're going to talk all things about assets and taxes tomorrow, but how was it? So banking information was a little discouraging. Oh, wow. Why was it discouraging? Do you feel like it's too many requirements?
I think to me it's a little discouraging because I just feel like I don't meet the requirements per se. Like as far as things as simple as like, even with filling out the form where it was asking about I guess your income and different things like that. I don't have a personal income right now. I'm like, staying at home with my girls right at this moment. So I'm trying to set up all of these things properly before I push myself into like actually doing the business stuff. So I haven't started making any of anything much. So I
So
think
did you hear Brian say that you can use projected income when you go for funding?
no, I didn't hear that part.
Yes. So a lot of people think that your business needs to have income and it doesn't. You can use projected income. So what do you project that your business is going to make? So do you project that it's going to make $100,000 or 50,000 or 200,000? So that's one of the beautiful things about acquiring funding for an entity versus as a person, because as a person, you can't use projected income, right? As a person, you have to use, the income that you're generating through W-2 or 1099. So that's why it is easier to get funding for an LLC. So, but Melody, I do not want you to be discouraged. I want you to know that you are able to get funding and that you have to put yourself in the position to be fundable. And so that means that your company has to look credible, which means that there are a couple of steps that you have to take.
Mhm.
So I need you to be willing and able to know that you have to take these steps. Now, the beautiful thing is that it's okay for you not to be in that position right now, but if you move forward with getting the assistance with Brian and his team, they are going to put you in that position. So they're going to help you step by step until you're at the point where your entity is now fundable, and then you're going to acquire the funding. So
Right. Uh,
so I heard him say, we are able to assist startups.
right.
Startups companies that just started today and yesterday,
Hmm.
right? And so if your company is not there yet, that is perfectly fine because they are the team that's able to assist you if you're brand new and haven't, had the time to build business credit or get any funding. So that's who they're designed to assist, right?
So did I hear him clearly when he said, I guess it sounded like he was saying that we need to keep our trust private and we need to get an LLC.
So
Um, so
So yes, you did hear him clearly. And and he feels very strongly about not getting funding for the trust. Excuse me, not getting funding directly for the trust. So the way that he does it is you'll get funding for the LLC, and then the LLC will then lend the money to the trust, right? So remember how I showed you how to document a loan, and that loan can come from the LLC or that loan can come from you personally, right? But the money is going to come from another entity. It's going to either come from an LLC or corporation or you personally, and then that other entity is then going to lend the money to the trust, right? And instead of having the trust subject to acquiring the funds directly. And when it comes to funding, right, it is 10 times easier to get funding for an LLC than it is for a trust. And the reason being is what I told you guys earlier, which is that some banks don't even want to establish a banking relationship with an irrevocable trust because they know that as a creditor, they cannot come after the trust. So just imagine if they were to give the trust a credit card or a loan. That means that if the trust defaults, they can't recover those funds as they would be able to with an individual or an LLC or corporation. So that's why they are very weary. So now, if you have 100 banks, right? 10 out of the 100 banks will lend you money for your trust, right? So the number of financial institutions available is very limited. Out of those 100 banks, all 100 of them will lend you money for your LLC. So it's an easier process versus the trust. And then the trust, in order for you to get funding for the trust, you need to qualify, which means that you have to show proof of income. You have to show proof of income or some assets. So you have to show either bank statements or a tax return.
okay, so should the trust own that LLC that's applying for the loan or the
So
funding?
it depends. But it is still the same process. So if the trust owns the LLC, that's completely fine. And they'll just, ask for supporting documents of who the owner is. And if it's you, so for example, if you already have an LLC, the best thing for you to do is for you to get funding first, and then you transfer the ownership to the trust.
Okay.
All right. Next we have Jose.
Hi, how are you doing?
Wonderful. How are you?
Good, thank you. That was very informative. I appreciate you bringing Mr. Brian on.
Yes, thank you so much. I appreciate you saying that.
Okay, so my first question is related to the bank account, the trust bank accounts. Is it okay to open those accounts at a bank that you already have personal and business accounts at?
So, best practice is for you to use a bank that you're not associated with. So, you want to use not someone, you want to use a financial institution that you don't have a personal account with or even a business account with. And that's going to put you in a position to where you are not tempted to do any form of commingling of funds.
Okay. And if we're planning to put crypto, other assets like stocks, into the business trust, should we open new accounts for that also?
New accounts for the crypto.
Yeah, as in like brokerage accounts like Fidelity, Coinbase, like all those types of accounts.
Yeah, so it depends on the brokerage. So you would have to contact them to let them know if you can switch the ownership. If not, more than likely what the brokerages do is they'll have you create a new brokerage account, and then they'll transfer your asset from the old one to the new one without having to actually sell the asset.
Okay. And if they do the new, like the method where they would have to make the new account, the account will be in the name of the trust, correct?
That is correct. It'll be in the name of the trust. The trust is the owner of the account, and that is what you want, especially if you're holding those type of assets.
Okay, thank you. One more question about the meetings. For a person, actually, I'm not sure if I already asked this. Can a person who isn't on the board be in the meetings? And
Yeah, you
if
asked that question. You asked that question yesterday. So for privacy purposes, you do not want to invite anyone who is not a part of the actual trust organization to be in the meeting unless you are nominating them for a position within the trust organization.
okay, so the person I'm thinking about is probably gonna be like one of the beneficiaries. It
So the beneficiary is a part of the trust organization.
Okay. Are there any less important roles that could be also assigned to like a person who's a young beneficiary? Like not something important like a secretary, like probably not on that level. Is there something, more like
No. No,
no?
so yeah, so the thing about the board is that they are assisting with administration and management, and the beneficiaries not hold any type of management positions.
Okay. Okay. That answers everything. Thank you.
All right, you're welcome. All right, let's see who's next. All right, next we have Stephanie. Hi, Stephanie.
Hi, gorgeous. Quick question. Are we going to cover the life insurance tomorrow?
No, we are not covering the life insurance. So the life insurance is a separate class.
Oh, okay. All right. Thank you.
Yeah, so if you want some type of information on it right now, we do have virtual trainings inside of the portal,
Okay.
specifically about life insurance and infinite banking. But as far as a live class, it's not a part of the workshop.
Okay. So is it like an additional cost to learn that
Uh,
process?
No, it's not an additional cost. It's just a separate class outside of the workshop.
Gotcha.
So
Okay.
our classes outside of the workshop deal with real estate, investing, infinite banking, mindset, things like that.
And that's in the portal.
Yes.
All right. Perfect. Thank you so much. I hope you have a great day.
Oh, you too, Stephanie. Thank you so much. And I am so glad that I'm seeing you every day on the workshop. So
Thank you. Me too. I'm so excited.
yes, me too.
Thank you.
You're welcome. All right. Next we have Namir. Hey, Namir, how are you?
I am exuberant, Christina. How are
I
you?
know
Do you
that's
wake up
right. I know that's
like
right.
that? Do you wake up like that?
I do. I do. I do.
You are, she said she took the words out of my mouth. You are gorgeous, Christina, and I love you. And I
Oh,
thank
thank
you
you.
so much. Continue to drop this bomb on these people. We need it. We all need it. We need trust. This is so important. I thank you so much again. And Brian, look, Brian be always dropping it, boy. He make it so easy. He make it seem so simple, don't it?
I know, right? Just
You make it
come here, get
simple
$1 million
too.
for all of your trusts. I know. For all of your LLCs
Oh,
and corporations. It's just, I know. He's great though. So
so basically, he's saying it doesn't matter where you are, just call and get a consult, so he can
yeah,
basically find out where you, no matter
exactly.
what.
Yeah, so even if you have negative items on your credit, they'll help you. So they'll point you in the right direction. They personally don't do credit repair, but they have a division that does, and they'll help you walk through that process so that all the blemishes on your credit are off, and then you can move on to the next phase. And so there's various different funding phases, and they bring you through all of those phases.
Have you ever heard this before? You look like trust. You feel like you feel like I can
You're
trust
funny.
you. Like I'm telling you, from day one, I'm like, man, you know how we be nervous about giving people our information and going through these different things. And I'm just telling you, man, I think it's just your spirit, Christina. You just make people comfortable. I know you hear it all the time, probably, right?
I do, yeah. It's just, I don't know, it's just a part of my nature. That's just the way God designed me.
Yeah.
Just a vessel, yeah, that God uses just to help people. I'm a helper.
Girl, you an elf angel. You hear me? I ain't gonna talk you. I love you and I thank you so much. Every time I get up here, I just get value every time. If I just tap in like out the blue, I'm telling you, I be tapping it right at the right time. Like yesterday, because you know I'm working on my business trust. That's the
Yeah.
part I'm at right now. I still haven't got no grantors. Like the lady said earlier, my family is just, you know, a lot of our families are just not into this. That's why it's just so hard, you know, sometimes to find like. And I'm glad you do have a community, but I'm not nervous about the community, but you know, I don't know me. I'm just kind of nervous about people. So I'm
Yeah.
just you breaking down my guard every time I tell you. I said, let me go and jump in here.
I'm so glad to hear that.
Yes. Gratitude, though, Christina. Thank you so much.
Thank you, Namir. Appreciate you so much. Thank you for being here.
Always. Always.
All right. Next we have Latasha. Hi, Latasha.
Hello, Miss Christina.
Hi. How
Uh,
are you, beautiful?
trying to get together over here.
Yes, ma'am. I totally understand.
I press it and then it goes away. Okay.
Oh, yeah, there it is. We can see you.
Okay, so my question is, first thing, can you expound a little more on the authorized agent and who
Uh,
they can be, who they cannot be, or just expound on that piece of it?
uh, the authorized agent. So what are you
Yeah.
referring to? Are you referring to a bank?
For your trust or I know they handle the business or information.
Are you
I'm
talking about
hearing that it's a
registered agent? Registered agent?
registered agent. Okay. Yes,
Okay. Okay.
registered. My
So,
fault.
yeah, no problem. So the registered agent is an individual or a third-party company that you would appoint in order to receive correspondence for your entity. So when it comes to the trust organization, automatically that person is the trustee unless the trustee will designate that task to another person or another company. So when it comes to other legal entities like LLCs and corporations, registered agents are required, and that information is going to go on the Secretary of State. So if you already have one of those legal entities, if you are the registered agent, you want to remove yourself and you want to add a third party. So tomorrow I will show you that process when it's dealing with the entities that are registered with the Secretary of State. But in regards to the trust, a registered agent is internal, so you don't have to worry about you visibly being known as the registered agent, because it's only a part of the trust constitution, which no one is going to visibly see it.
Okay. Okay. I think that was my major question.
All right, sounds good. Thank you. Thank you for that great
Have a good
question.
one, hon.
You too, you too. All right, next we have Aaron.
Hey, Christine.
How are you, Aaron?
Okay, question, right?
Yes.
I noticed that when you was creating the EIN, you had a holding company. So
It's not a holding company. So
oh
are you saying that I use the word holding?
yeah, I was gonna
Yeah,
ask.
I use the word holding, but it's not a holding company, it's a trust. So a trust and a holding company are two different things. Now you can operate the trust like a holding company. And so that's why I use the word holding, because I'm operating the trust like a holding company. But as far as the type of entity, is a trust. And we had that list of legal structures, I chose the structure as a trust.
Mhm. Okay. All right. So can I use a holding company to create the trust?
You can, a holding company can be the grantor if you would like it to be.
Okay.
You just cannot, as an individual, you cannot put your signature on both grantor and trustee.
Oh, okay. I get that. All right.
Okay.
So what comes first out of everything,
In regards to,
far as the trust? Like what's the first trust that should I start with?
so you want to start with the trust that you're going to place the most assets in. So people typically will start with their family trust and they will secure their homes. So you can start with any trust that you would want. If you don't have a business, then obviously you wouldn't start with the business trust. Some people, their priority is the business trust because of liability purposes.
Mm.
So it really depends on your structure, which trust that you need. So I've seen a lot of community members because because of the way that they're being structured, there's more urgency to start the business trust versus the family trust.
Right. Okay. Well, I do have a business, so it'd be best for me to do the business trust first.
Yeah, so I will tell you that the way that I showed you on the workshop is for you to do it simultaneously. So you don't have to choose which one you're going to do first.
Oh, okay. All right.
I would tell you to do all of them because, for example, when you go to notarize, are you going to notarize one trust at a time or are you going to go to the notary with all three trusts?
Probably one at a time.
I would go with all three trusts.
Okay.
So I can
Uh,
just get it all done. Now, when you go to open up the bank account, are you going to go one at a time? And that's three different trips versus just going to the bank one time and opening all three accounts.
Facts. Facts. Facts.
Mhm. Yeah, so I show you how to do it simultaneously.
Thank you. Thank you.
All right.
Yep. Thank you.
You're so welcome. All right. Next we have Crystal. Hi, Crystal. How are you?
Hi, Christina. How you doing?
I'm great. How are you?
Good, good. Okay, so I have a couple of questions. My first question is regarding the ministry trust.
Mhm.
So the protector, is it an optional role within the ministry
Yes.
trust? It
Yes, it
is?
is. Yes.
Okay, okay, cool. And it's optional within all three trusts. Is that right?
Correct. That is
Okay,
correct.
great. All right, awesome. Um, The next question. Okay, so I have a 21-year-old son, my only child. So of course he's going to be the beneficiary for the family trust,
Correct.
but he can also be on the board within the other two trusts, the ministry and the business trust. Is that
That
correct?
is correct. That is
Okay.
correct.
So in order, I vaguely remember, and I'm looking for clarification, but I remember you saying something
Watch my hairline.
about a
I'll tell you.
partial beneficiary can be a trustee, or I couldn't catch all of what you said. But it was something about a partial beneficiary could also be like a co-trustee or something like that. I don't want to mix your words, but
Yeah, so you're correct. So what I was saying is that a beneficiary can serve as either a successor trustee, which means that they're going to be the future trustee if anything happens to you, or
mhm.
they can actually serve as an acting trustee, meaning that you can assign them to be your co-trustee. And
Mm,
if you decide that you want them to be your co-trustee, you just have to ensure that they are not the sole beneficiary. So they cannot
mm.
hold 100% of the trust certificate units and be a trustee because that's going to be seen as self-dealing. So there has to be other beneficiaries, at least one other beneficiary on the trust so that it's not seen as self-dealing and they can serve in both capacities.
Now, can this other beneficiary be the ministry trust?
That's a really great question. So the beneficiary can be an entity or a natural person.
Okay. Um, okay, all right. I think that was all my questions. Thank you.
You're so welcome. Thank you, Crystal. Those were great questions. All right, next we have Namir, and then I'm also going to check in the chat to see, I see a couple questions in the chat.
Okay, my question was, I think you kind of touched on it yesterday about about the, the virtual addresses. You say we can all have the same place but have different suite numbers, right? For each
Yes,
one. And
yes.
then you say one is for the public and the other two is private, right? Your business trust is private. And the other no, the business trust is public, but the other two will be private.
Yes, yes. So if your business trust is acting as a holding company and it is going to own like your LLCs, then it's going to be public facing, meaning that it's on the Secretary of State's website to where the name of the trust and the address of the trust is visible.
So that'll be the only one that's public, basically. But the virtual addresses are all, like you're saying, they're like private. But this one, the only one that'll be actually on the actual um, website with the Secretary of State, right?
Yeah, that's correct.
Okay, all right. And what was the other one? I had one more question. Dang it. Oh yeah. When we like she said with the representative for your business. So if you make the owner one of the trusts, then I shouldn't have to have a host. I mean a representative for my business, right? Or an
So
actual trust.
you can list the trust as the registered agent.
Okay. You know what? I'm gonna just go on and get that last one so you can do all my stuff for me.
You're so funny.
I should. Okay.
Thank you, Namir. So there's a question inside of the chat. It is about the virtual addresses and how the government contracts don't accept them. So, the question says, if you ever lose your executive office address, would that cause a problem for your trust or your LLC? So, you would not be able to continue to use that office address. So you would just have to change the office address. So you would change it with the IRS, with the Secretary of State, and with all of the companies that you're doing business with or have contracts with. So it's okay for you to change the address. So if you don't no longer utilizing the executive office, that's fine. Whatever address that is now newly assigned to the entity, then you would just update all of those third parties to the new address. Latasha has a question.
Yes. So could you expound a little more when you mentioned that the trust can be a registered agent?
Yes, a company can be a registered agent. An entity can be a registered agent. A natural person can be a registered agent. A registered agent is a company, or, and I don't want to say company, I want to use the word entity. So it is an entity with whether it is a person or, or a contract that can receive correspondence for your LLCs or another entity. So
Okay. Okay. And one question from I had from yesterday about the FBO and the thank offering. So if it remains private, the only funding that's coming through is from its members.
So we're not going to use the word funding. So words
Oh,
are very important.
yes.
So what we would
Donations. I'm sorry.
Thank you so much. Yes. So any money that is coming into the organization from the members are donations, or their tithes or their gifts. So you can label them as any such way that you want. And that's how it's coming in. So what was your follow-up question after that?
Um, so this type of nonprofit can be public as well.
Yes.
Okay.
So if it is public, so I will tell you that a lot of our members, they want to be able to receive funds from the public. They want to be able to receive federal grants. And so they would have to go to the extent of registering their 508 publicly through the Secretary of State's website. Now, for them, it is an advantageous thing for them to do because of the way that they're operating their 508. So it's all in the way that you're operating your charity. And for them, they have decided to go through the route of doing that.
Okay.
Now, some of our members, they already have 501(c)(3)s, and that is their public facing entity. And then all they would do is incorporate their 508 into the 501.
Okay. It just folded in. All right. Thank you again, hon. I appreciate you.
You're welcome. Thank you. And we have Namir.
Oh yes, I remember it now.
Yeah.
So yesterday with the FBO, you said that that's the only trust that you can be your own grantor on, right?
No, you cannot. So you would not serve as the grantor for any of the trusts. You want to be the trustee in order to maintain control.
And would it be good practice, like whatever grantor you have for one, for all of them, or do I want different grantors for each?
Yeah, that's a great question. So you can have one grantor to serve as the grantor for all three.
Okay. And then the other one. Oh yes. And for business, so Mr. Dorsey, he only helps with business funding, not actually business structure, though, right?
So that's a very good question. I think they will guide you with business structure. So they do like some form of coaching in that space because they want you to be fundable. And so if you need assistance with the structure of those LLCs and corporations, they'll assist. Now, I'm not telling you that they'll do it for you, because I don't think that that's what they do. I think that they will provide you with the instructions so that you're able to get those entities.
Okay, so do you have a master class for that? Like to that kind of, because I think I'm kind of, you know how a lot of us, we know how to do the business, but the structure part, I think that's the part, like setting it up and actually, making all the parts kind of move together. That's kind of where I'm kind of at. It's like I'm a good field dude, but I don't know nothing about the house, girl. So
Yes,
that's
so that's a great question. So I have what you call the Entrepreneur Vault, and that is for business owners that want to learn how to set up an LLC. So it's not a part of the Wealthy Trustee program. It is separate. It's only $100, and you get access to 100 videos dealing with entrepreneurship. So
oh, can
obviously
I
in
that
the
link?
wealthy trustee, yes. So in the wealthy trustee program, I teach about trusteeship, right? But obviously I'm an entrepreneur, I have two businesses. So if you want to learn about entrepreneurship, if you want to learn about LLCs, if you want to learn the steps that you need to take in order to structure those type of entities, you have to get the entrepreneur vote.
Okay, so the entrepreneur vault. Okay, so that's for entrepreneurship. So do you have one for real estate? You walk us through the real estate too?
I am gonna do the real estate one, so that is coming
Yeah,
soon.
good. But that bio, every time you
Soon.
listen, every time you get that, oh my, your testimony, oh my God, I think that's what really moved me, man. Like how you came
Yes,
into this. Oh
yes.
my,
So
yeah.
my first business is my real estate investment firm. So that's my first business, and Seven Ways to Wealth is my second business. So I was
That's why
running my real estate investment firm 5 years before I decided to start Seven Ways to Wealth. So now I run both businesses simultaneously. So I do not educate and teach on real estate, but I have been asked to put something together, and that is what I'm going to do.
Did you say you worked for a firm or you had your own real estate for 5 years?
Oh, no. So I'm saying that I had my real estate investment firm for 5 years before I started Seven Ways to Wealth.
Oh, your firm. Okay, got you.
Mhm.
Okay, okay.
Yeah. So
Yes.
my real estate investment firm is almost 11 years old.
Let me find out because you don't look like you 11 nothing. But
Right.
now,
I know.
so do you have a team that's like military that can like help walk us through like the military part of the real estate, or is that all? Or is that kind of be all the same? Real estate and VA, is that kind of, is it all the same?
Um, oh, when it comes to, so I'm not sure when it comes to like the
Like,
military.
not a-
Yeah, I
so
don't
you're
have
not,
the resources when it comes to that.
you're a warrior, but you're not a, no, listen.
Yeah,
But
I
okay,
know, right? I'm a warrior, but I'm not in the military.
yeah.
That wasn't my calling.
So now, so you can, do you have a link for the course for the one with the
Um,
LLC?
yeah. So Ivy will be able to get you the link so that you can enroll into the vault. And so the vault is going to automatically go into your online portal. So once you pay the $100, you're going to have access to the 100 videos on the vault.
Is
So
there any way?
you're
Is
going to
there
use
any way
your
you
same
can send me
login
another link?
credentials.
Is there any way you can send me another link for my login? I think it's
Oh
way
yeah.
back.
Of course, yeah, Ivy will be able to send it to you, so don't worry. She's gonna get right on it so that she's able to provide you with those links. And so once you enroll into the vault and then you get your login credentials, you'll log in and you'll be able to see the vault there.
Oh man, this the year, Christina. You might, I'm buckling up. I'm gonna be in the back seat. I'm not gonna take the passenger seat. I'm gonna get the back right seat. God, this time, girl.
That's the
I'm,
truth. Oh my
all
God,
right, all
Namir.
right,
Namir is so extra. He's just pulling all this information out of me. Lord have mercy. Help
girl, you
him.
got it. You be spinning it so fluently, like he's just, like it's just, oh
Yeah,
my.
I feel like the Namir knows me so well. Like he's been a part of this program for 2 years. I'm telling you, this man know me.
Man, you are the greatest. You think I be joking when I say that, don't you? You think I just be trying to flatter you or something? No, you are the greatest, girl. I'm telling you, because ain't nobody else. Everybody else be trying to get over on people, and you just so sweet and so angelic. I'm like, girl, help me,
You are
help me
so
there.
funny. You are so
Yeah,
funny.
you're the greatest, girl. Thank
Yeah,
you so
thank
much.
you, Chris. Thank you. I appreciate you. All right, let me see. I have 2 more minutes here. So let me see. Serena says you have to get a trust notarized every time that you add an asset. No, you do not, but what you need to get notarized is the amendment. So once you process the amendment, it needs to be notarized and added to the trust indenture. So that's a really great question. And yes, your Schedule B is a living document. So whenever you add whenever you add an asset into the trust, you are going to update your Schedule B. And then the next question I see is, can we take the life insurance policies out of on anyone if we know their personal information? So that's a great question. It depends on the type of policy because some policies require a medical exam, specifically the IULs. So it's very hard for you to take out a policy on a person and them not be aware if a medical exam is required in order for the policy to be approved. So now the thing with your granddaughter is because she's a minor, there is no medical exam. So with her, you are able to do it. So they're not going, so you're going to have to prove that she's inside of the trust because there has to be some viable reason of why are you insuring this individual, or why is the trust insuring this individual? And obviously it's because that individual is a beneficiary. So when it comes to minors, yes, you are able to take out a policy on them if they're listed as the beneficiary and there is no medical required for that. So yeah, you're fine with that. And when do we sign up the LLC course? So if you're talking about the Entrepreneur Vault, the team will be able to get you that link, and it will, once you enroll into the vault, then it automatically goes into your online portal. So when you log into your portal, excuse me, you'll see all three. So you'll see the workshop or trainings, you'll see the Wealthy Trustee program, and you'll see the Entrepreneur Vault. Can the beneficiaries be board members? The answer is no. Beneficiaries cannot be board members. So beneficiaries cannot have any type of administrative power. So the only way that a beneficiary would be a board member is if they are simultaneously a trustee. So let's see here. The next question is, so should we realistically be setting up an LLC first or the trust? That's a great question, Melody. So you want to set up the trust first because the trust is going to be the owner of the LLC. So just think about it from that standpoint, right? Who's going to own the LLC? The trust. So who needs to be created first, the LLC or the trust? The trust needs to be created first because the trust is then going to form the LLC. And out of the three trusts is going to be the business trust. So the business trust is going to serve as the authorized member and registered agent of the LLC. And the next question is, thank you. Is there a specific document for the amendment? That's a great question. So I do have a request to provide you with the resource for the amendment. So it's going to be uploaded on the resources. So it will be available on the resources tab inside of the program. And Namir, you have something to say? If not, we are going to adjourn. Put forward facing with the trust.
Yes. Now I have another. Would good business practice be? Can the same whatever board I put together for one? Do I want? Let's say I put a board together for my business, right? Would I use the same? Could I use the same people for across all boards, or it wouldn't be good? Would I want to get like other people?
It depends on how you're going to operate the trust. So generally, if it's easy for you to have the same board across the board, then yes. If not, it depends on the operation. So it's really up to you if you want to use the same people. Maybe the person your business board is not qualified to be on the board for the nonprofit. So it's up to you, but some people generally use the same board.
And then also too, like what was it? I mean, I don't know why these questions be right off the top, but the board, and then what was it? Oh God, I can't think of it. It was right on the tip of my tongue, but that was it. I just want to know about the business across the board. Would it be good practice to have the same? But you're saying no because they different boards, they different things going on, so you kind of want to keep it.
It depends on the operation. For some people, it is more simple for them to use the same board members, and for others, they use different board members because of the operation and qualification of the entity.
And when you doing another 50% off?
Oh, I don't know. No, my team told me I'm not allowed to do 50% off anymore.
Okay, so I got it. I did good then.
You're so funny.
Yeah. Okay. Thank you.
You're welcome. All right. So someone said, can we have a public forward-facing holding company with the trust so that the trust remains private? So that is fine. The only issue is that the holding company still also needs to be registered on the Secretary of State's website And then the trust is still going to be visible on the public record for the holding company. So there's no way to really get around it if you're going to have your business trust involved in the ownership of those entities. So I have an LLC already. Is that a problem for the business trust? So it's not a problem for the business trust. The business trust is going to be the owner of the LLC. So tomorrow I will show you how to process an amendment for the LLC. So stay tuned. Can different entities be members of the board? Yes. Board members can be entities. All right. So Melody said 49% off. That's great. I love that. We have to talk to my COO because she is more strict than I am. She doesn't play. So without further ado, we are going to wrap up day 4 of the Wealthy Trustee program. The workshop was so amazing today. We talked about business credit and funding. Our funding manager came in and educated you guys. We talked about a list of banks, banking operations and procedures, board meetings, and how to document how much you're going to fund the trust with. Tomorrow, we are going to talk about asset protection. So I'm going to show you how to transfer your house, your car, and your business. And then our CPA is going to teach you about trust taxes. So stay tuned for tomorrow, which is the last day of the workshop. And in order for you to prepare for tomorrow, please continue to fill out your worksheet, which is the asset inventory list, so that you can take an inventory of your assets so that you guys know which assets are going to be placed in the trust, which assets do not qualify to go inside of the trust. And then the last part is for you to book that call with Brian Dorsey and his team so that you can see where you are within the funding process and you can begin the work to get the OPM, the money that you need in order to acquire the assets for the trust. So without further ado, I love you guys so much, and I will see you here, same place, same space tomorrow at 11 a.m. Eastern Standard Time. I do have a lot planned for you, so you are going to get an email reminder as well as a text message reminder, and we will see you here tomorrow. So you guys have a highly favored rest of your Thursday, and